Cipher mining just closed Wednesday's session with a bang, finishing at $24.71, up more than 9.7%, after touching a brand new all-time high of $25.52. This wasn't some random pump or day trader frenzy. It was a continuation of a powerful trend that's been building for weeks, one driven by genuine business transformation, analyst upgrades, and growing institutional confidence in what Cipher is building. So, what exactly happened? Why are analysts and investors suddenly treating a former Bitcoin miner like a rising star in the AI infrastructure race? And can this momentum actually last? Let's break it all down. Cipher Mining, ticker CIFR, has historically been known as a pure-play Bitcoin mining company. But over the past few months, it's been quietly reinventing itself, shifting from mining digital coins to building digital infrastructure. That shift just went into overdrive this week, when Cipher announced a massive 15-year, $5.5 billion lease agreement with Amazon Web Services, yes, AWS, to provide up to 300 megawatts of capacity for AI and high-performance computing workloads. This deal is a game-changer for Cipher. Not only does it validate the company's long-term vision beyond crypto, but it anchors a stable, contracted revenue stream that most miners could only dream of. And it's not a one-off. Cipher already had partnerships in place with FluidStack and Google for AI data center hosting. Combine those deals, and the company has effectively repositioned itself as one of the few mid-cap players bridging the gap between crypto infrastructure and the surging demand for AI computing power. Now, here's what makes the timing so remarkable. The AI boom has created a global scramble for data center space, not just servers, but physical power, cooling capacity, and reliable land leases. Traditional data center providers like Equinix and Digital Realty are expanding, but they move slowly and operate at much higher valuations. Cipher, on the other hand, already owns large-scale energy assets in Texas, where it's been mining Bitcoin for years. That gives it cheap land, access to renewable power, and an existing energy management system, the perfect ingredients for AI infrastructure expansion. In other words, Cipher is using its crypto infrastructure as the foundation for an AI future. And Wall Street has noticed. On Wednesday, analysts at Needham and Company raised their price target on CIFR from $15 to $26, maintaining a buy rating. Other firms quickly followed suit, praising the company's long-term strategy and execution. This is part of a broader wave of bullish sentiment across the data center and AI infrastructure sector, but Cipher's jump stands out. It's up more than 300% year-to-date, outpacing nearly every peer in its category. The fact that this rally came after the announcement of new debt makes it even more impressive. Let's talk about that debt for a second, because that's where the measured part of this story comes in. Cipher successfully priced a $1.4 billion offering of senior secured notes this week, with proceeds going toward financing its Barber Lake facility in Texas. At first glance, that sounds like a lot of leverage, and it is. But here's the key. The debt is being used to fund tangible, income-generating infrastructure tied to long-term contracts with hyperscalers like AWS. So rather than being reckless borrowing, it's a strategic move to accelerate growth while locking in predictable cash flows. When the market saw that, it didn't panic. Instead, it recognized that this was Cipher moving decisively into the AI infrastructure big leagues. From a fundamentals perspective, the company is starting to look more like a hybrid between a data center REIT and a high-growth tech company than a speculative miner. In its most recent quarterly update, Cipher reported roughly $72 million in revenue, positive adjusted earnings of $41 million, and a modest net loss of just $3 million, a huge improvement compared to earlier quarters when crypto volatility dominated results. Management also reaffirmed its focus on scaling its Colchis site, a 1-gigawatt development in West Texas, alongside the new Barber Lake project. Combined, these facilities could make Cipher one of the largest independent AI-focused infrastructure providers in the United States by 2026. Now, let's talk about the bigger picture, the why now. The market for AI infrastructure is exploding. Every major tech company, from Amazon to Microsoft to Google, is in an arms race for computing capacity. But there's a bottleneck: power and cooling. You can have all the GPUs in the world, but if you don't have the power infrastructure to run them efficiently, they're useless. That's where companies like Cipher come in. They already have the expertise in managing large-scale power consumption, optimizing load balancing, and operating in energy-dense environments, skills honed from years in Bitcoin mining. So while the AI revolution is driving unprecedented demand, it's the infrastructure layer that's becoming the real gold mine. And Cipher is positioning itself right in that layer. Eric Jackson, a well-known tech investor who's been vocal about companies like IREN and CIFR, summed it up perfectly. Both firms have graduated from the speculative crypto phase to the AI infrastructure phase. That sentiment seems to be resonating with the market. Just look at what happened this week. IREN surged after its Microsoft partnership announcement. CIFR followed right after with its AWS deal. Two names that once lived and died by Bitcoin price swings are now trading as legitimate AI plays. And the thing is, this trend isn't going away. We're seeing a structural shift where miners are realizing that their biggest asset isn't the Bitcoin they mine, it's the energy infrastructure they already control. That pivot could reshape the entire industry. Now, let's take a step back and look at the risks, because no story this good comes without them. First, execution risk. Building and maintaining large-scale data centers is incredibly complex. It involves supply chains, construction, regulatory approvals, cooling systems, and power purchase agreements. Cipher has proven it can mine Bitcoin efficiently, but managing long-term hyperscaler contracts is a new game. The AWS deal, for instance, doesn't begin generating rent payments until August 2026. That means the company has a long runway to deliver, and the market is already pricing in that success. If there are delays or cost overruns, sentiment could shift fast. Second, debt risk. $1.4 billion is a lot to take on for a company of Cipher's size. While the secured note structure provides stability, higher interest rates could weigh on future margins. Third, valuation risk. At these levels, Cipher is trading well above many analysts' fair value estimates. So while the long-term story is exciting, the stock could easily pull back in the short term if enthusiasm cools. Finally, timeline risk. Most of Cipher's biggest catalysts are still 1 to 2 years away. Investors will need patience to see those contracts materialize into real revenue and cash flow. That said, the long-term potential here is enormous. If Cipher delivers on its build-out and successfully transitions from crypto mining to AI hosting, it could emerge as one of the key mid-tier infrastructure players supporting hyperscaler workloads in North America. That means more stable revenue, better margins, and a valuation multiple that starts to look more like a data center operator than a crypto miner. And that's the bull case in a nutshell. Cipher isn't just surviving the AI revolution, it's pivoting into it. So, what comes next? Investors should watch a few key milestones. First, construction progress at Barber Lake and Colchis. Updates from management on power capacity installation, cooling systems, and lease readiness will be critical signals of execution. Second, further partnerships. If Cipher can land additional hyperscaler clients or co-location deals beyond AWS and Google, that could significantly expand its addressable market. Third, financial updates. The company's next quarterly report will likely provide clarity on how the new debt is structured and how much of it is already allocated to fixed income projects. Finally, keep an eye on the broader AI infrastructure narrative. Every time there's news about GPU shortages, data center expansions, or hyperscaler spending, it reinforces the value of what Cipher is building. At the end of the day, the story of Cipher mining is really about transformation. A company that started as a pure Bitcoin miner is now standing shoulder to shoulder with some of the biggest names in cloud and AI infrastructure. It's proof that the real winners in the next phase of the tech cycle might not be the companies designing the AI models, but the ones building the power and compute backbone that makes those models possible. Cipher is betting big that it can be one of them. So, if you're an investor who believes in the long-term growth of AI, energy infrastructure, and decentralized compute capacity, Cipher deserves a spot on your watch list, maybe even your portfolio. Just remember, this is still a high-risk, high-reward play. Execution, timing, and market sentiment will all matter. But as of now, the signs are undeniably bullish. The company is well capitalized, well positioned, and backed by major industry players. And that combination, rare in such a volatile market, might just be what keeps CIFR in the spotlight for a long time to come. If you found this analysis helpful, make sure to hit like and subscribe. I'll be covering CIFR closely as the build-out continues and new details on the AWS and Google partnerships emerge. Thanks for watching, and as always, stay smart, stay focused, and invest with purpose.